Hi, I'm going to quickly show you the very basics of a Schedule C, which basically means you're a single member entity, single member LLC, or a sole proprietor. I'll also skip to an 1120S, and just to show you what does the IRS expect to see when you do a tax return? What kind of expenses should you have? And the IRS gives you all the answers if you just look at the form. So we're going to just look at the form. We'll talk about it for about a minute or two, and then it'll give you some idea of what you should do to proceed to get the tax returns done, whether you're doing it yourself or whether you're using a tax accountant, strategist, CPA, or whatever it is you want to call that professional. All right. Now let's go share our screen and we'll get right into it. Okay. Share that baby. All right. This is a Schedule C. As you can see, very simple. It's just text. If you're from America, you should be able to read Schedule C. Okay. You can even download this as a PDF and fill it out if you want to just kind of get an idea of what you should be doing when you send your stuff to your accountant. Gross receipts, that's sales, self-explanatory. Cost of goods sold, if you're in a business that sells things like products, you put it there. You can see from line 42, and that is a second page that you would fill out over here. Cost of goods sold, purchases. Some people do tracking of inventory beginning and ending. You could put that there. Materials and supplies, purchases. If you have labor related to those supplies, great. Oh, and by the way, the second page here is all about your auto. So yes, IRS does want to know things about your auto. So don't ask your accountant what you need. Just look at the form and see what the accountant's going to put on there, and you can figure it out. Oh, when did you start using your car? How many business miles? How many commuting miles? How many other miles? Was it used for personal? You just fill this out. Why not? Make your accountant's life easier. Maybe the bill will be less. Okay, so expenses on a Schedule C, advertising. Okay, car and truck expense. See instructions. If you really want to see the instructions, go ahead. See the instructions. But anyway, that kind of rolls from the other forms to figure out what your true auto is, because sometimes they take away a personal amount from the total. Commissions and fees, contract labor, depletion is, you'll never see that, but unless you're in like some kind of oil and gas company. Depreciation, let your accountant figure that part out. That's when you have fixed assets, employee benefits programs, if you have staff, if you have salary, meaning you actually do wages on a W-2, insurance other than health, interest, mortgage paid to banks, legal and professional services, office expense. Okay, you can put it all together, make your spreadsheet, pension and profit sharing plans, rent or lease. So if you lease a vehicle, machinery or equipment, you put it there. If you have just a regular office space or rental, you put it there. Repairs and maintenance, supplies, taxes and licensing, travel and meals. So deductible meals, are they deductible? 50%, 100%, utilities, wages, and then you get into the more subjective other expenses when they don't kind of align in any of these other categories. You put it as other, and that's when you send the spreadsheet to your accountant to say, hey, these are my other expenses, and other expenses will go down here. Look at that. You could just put in your name of the expense, whether it's dues and subscriptions, whether it's event rentals, if you're doing the Augusta rule, whether it's sometimes people say, no, it's not contract labor, it's contract services. It's sort of like a fine line. Put it there. Very simple. IRS tells you what you should be doing. So stop asking the accountant too many questions when you can just ask the question of what does the IRS want by looking at the forms. And let's say you're an S corporation, it's very similar. Gross receipts, cost of goods sold, compensation of officer. How much did you pay yourself, the owner? Yes, 1120S. That's when you have to do that reasonable salary. Well, there's a reason why we talk and preach about it, is because IRS wants to see that you have compensation of officers. Okay, they don't put a line there just so you can ignore it every year. Make sure you have reasonable salary in your S corp so you don't get in trouble. Then you have salaries for other people that are not owners. Then you got repairs and maintenance. Sometimes companies have bad debts, rents, taxes and licensing, interest, depreciation, depletion. You're just never going to see that one. See oil and gas depreciation. It gives you a clue, so just ignore it. Advertising, pension, profit sharing, employee benefits. Like some people say, health insurance is an employee benefit, so you put it in there. Energy efficient commercial. You're not going to see. You're never going to see that. I never see it. Other deductions then gets into that area of it's not anywhere here, so let's put a schedule for all those things that are not there, and you can pretty much ignore everything else. Let your accountant handle the cash versus accrual basis. It's good to know where you stand in that kind of basis. Kind of helps to know whether we should be accruing things if you're accrual, or if we just look at what came in and out of the bank, then you're cash. And then all these other things. This is where you need an accountant or a tax preparer to kind of figure things out for you. And oh, look, Schedule K. Schedule K. There's other things besides your ordinary business. You got rentals from properties. Never own or buy a property in your S corp. That's for another video. But sometimes you have a situation where you do own the real estate and you see 8825. So you go to look at the form 8825 and boom, you'll see all the things you need to be able to fill out that line too. And then you have ordinary dividends, interest income, long-term capital gains. So sometimes an S corp can own some of this. And all this stuff, by the way, if you're a partnership return, it's the same idea. Look at page one, then go and look at the other pages where it has the Schedule K. Schedule K rolls forward to a K1. This is the K1 parent page, and it all flows to a K1. You can ignore the balance sheet because that's what your accountant's going to help you with. But if you want to do a DIY, go ahead. There's a balance sheet. So you should have a balance sheet on your books. Don't just give your accountant profit and loss numbers. Give them balance sheet numbers. And if you don't know what that is, ask. Get a bookkeeper. All right. And then you have M1, M2. It's also a little bit more complicated. Don't worry. That's just for your accountant to focus on. So if you have any trouble or if you need any help, this is kind of what we as an accountants do. And we need to put it all together for you. Have a great day. Hope this helps.